Hello, hello. It is November the 30th, and I did not complete any trades today, but I did work on a new version of my strategy and a new pre-trade checklist. So let me go through the pre-trade checklist real quick for you, show you what that is. So this is in my Rock Solid Trading Wisdom Journal. This is today's entry, this morning's entry before the market opened to always remember. And these, I put these in order of importance. So the most important is at the top, least important is at the bottom. I mean, they're all important, but I'm just saying the most important is at the top, and that's to trade with a clear mind. A lot of successful traders that I hear talk in interviews and things like that say that trading is 80% psychology and 10% entry, 10% management, something like that. But they almost always say 80% psychology. And if that's really true, then maybe instead of me spending 80% of my time trying to find entry patterns, maybe I should be finding or using 80% of my time to think about and build up my psychology, meaning how to develop a clear, calm mind, very relaxed but alert, just a clean kind of way of thinking, 100% committed to risk management and money management, 100% committed to staying calm, not trading emotional, not trading from fear or greed or revenge or anything like that. Spending a lot of time thinking about those kinds of things and practicing the behaviors of remaining calm and the thought processes, developing the thought processes of a good mental competency that goes along with being a great trader. So that's why I'm putting this top of the list. And it's something that, if I'm really being honest, it's the most important thing in trading because it's the only thing that could really keep you in the game long term, I think. So the next would be trade with the trend. Obviously, the trend is your friend until it ends. Top picking and bottom picking, while it can work, and it has worked for me and has worked fairly well, it's still a lower percentage. It's still choppier. The moves typically are going to run into resistance in the form of moving averages because the moving averages, if you're trying to pick a bottom, the moving averages are going to be above you, and vice versa for picking tops. So you're going to have, instead of having moving averages support you if you're trading trend continuation, you're going to be fighting them. So that's something to think about. And then time of day. I'm always noticing that some of the very best trades trigger at the top of the hour and at the half hour. And that's just, I don't know why that is. It's just really, really common though. So I'm not saying it has to be on the minute that you enter, as the clock strikes 12 or clock strikes 30, but close to it is better. Like, 5 minutes before to 5 minutes after. RSI, checking RSI on the 15-minute chart is just really helpful. What I've really noticed is that for shorts, if it's bouncing under 45 on the RSI chart and bouncing above 55 for longs, these are great places. Typically, really monster trades or some of the best trades tend to originate from those areas on the RSI chart. So, finding alignment and confluence with RSI is very, very, very helpful. And finally, the pattern. I'm putting this last because I'm always putting this first to the detriment and to the forgetfulness of all these other things. So, it's pretty much of a given that I'm going to be looking at a pattern before I trade. But I want to make sure that I check all those other things first, or at least at the same time as checking a pattern. They don't, need to get left behind. So if we put them all above pattern, then we're going to make sure and notice those things as part of the pre-trade checklist. Okay, let's take a look at a 15-minute chart and let's look at some setups. I've been trading for a long time, but I've been kind of committed to the 5-minute EMAs as far as using trend continuation EMAs. And today, just for the heck of it, I threw on a 15-minute chart with 15-minute EMAs just to see what we could see here. And what I noticed is that, and I took, by the way, this purple line is the 8 EMA on a 15-minute chart. The only other EMA I have up here is VWAP. That's it. That's volume weighted average price. There's no other EMAs on this chart, and that's just for simplicity's sake. I've also gone ahead and taken the wicks off because it just makes it easier to find what I'm looking for. And what I'm looking for, basically, is the following. For trend continuation plays, I'm looking for a strong move up. See here. Sideways consolidation. A pullback to the 8 EMA, which is the purple. And a continuation candle. In this case, green candle. I need a green candle to complete, 15-minute green candle to complete before I'll consider the trade. Okay, now one of the cool things about this is that what you can do before you ever take the trade, and I mean you have to do it pretty quickly, but it's not that hard. You can be ready. What you can do is before before the price ever gets over to the CMA, let's say it comes up here and starts trending sideways. Okay, and maybe you're somewhere in here. This right here is an hour. This is 4 15-minute bars. So that's an hour's worth of time. Gives you plenty of time to go ahead and draw. I'll just do it over again. Draw a trend line here and measure this move. Now, this is wickless candles, okay? So I'm just open to the close, open of the first candle to the close of the last one that's in the pop, let's call it. Some people call it a boom. I call it impulse wave, actually. That's what I call it, impulse wave. So you got that measured, and then just go ahead and clone that line. And then you'll know when you get really close to deciding that you've got a potential trade, in that you see that you've got the right color bar and you're nearing the end of the 15 minutes and it's looking like it's sitting, it's trended sideways and it's sitting on the EMA line, getting ready to complete, on top of that line. So you'll know that what you're going to do is going to go to the bottom of that bar, okay? And that's going to be your expected move. So you can go ahead and put this trend line, okay? Just grab one from anywhere and go ahead and put it at the top. And now you know what the target's going to be. Now this one exceeded it, and that's pretty rare. But I wouldn't expect necessarily to get more than this. Most of them do. It's uncanny how often they actually hit exactly at this line. So this one did exceed it very well, but that's possible because it was being measured from down here. Very, very likely, maybe it was being measured from starting here. But I'm just going to take it from here and be conservative. So what you can do is, as this candle's, you can estimate where this candle is going to finish. Go ahead and clone this line, put it on, and then measure and put one of these. Let's see, call it long position box on here. And put your stop under this and put your target up here. And you can look at this and you can know that this trade has a potential of going 3.45 risk reward. So you can decide in your mind, okay, is the risk reward of any particular potential trade worth my time, worth my energy, worth my risk capital? That's something that I haven't really been able to do. I haven't been able to really assess these trades. I mean, I haven't really had a way to do it. But I think, with 5-minute and 1-minute charts, there's really no way to do it because you really can't tell what move is going to be duplicated or likely to be duplicated. With 15-minute charts, I've noticed these things pop up over and over and over again. So I'll give you the next one. Let's look at the next trade that I saw, which was over here. Okay. This one did not have much of an expected move because I can tell looking at it right away that all it had was this little pop and then it had sideways consolidation, and then this is the bar, the continuation bar. So you could also say maybe it was here, but I wouldn't do that one because it's the reopen at 1800. So there's that. Look at another one here. A lot of these are kind of small. What I really like to find, and this is both on the upside and on the downside, I like to find one that has 3 or more bars. For example, this one right here. This one has 1, 2, 3, 5 bars. Okay, 5 bars on this one, and then 1, 2, 3, 4 bars to catch up to the 8 EMA. So on this one, you can be putting the line in as this is starting to catch up to the 8 EMA. Then as this 15-minute candle is getting ready to complete, you go ahead and clone the line, put it on, put your risk reward on, and you can see, hey, this one has the potential of going almost 6 risk to reward. That's the one, that's the one to take. And that's the one to try to hold for target. Not just get out early 1-to-1, which typically is what I do. So this is a way of kind of saying, hey, which trades are really worth my while, the most worth my while to take. This one you could look at and say, okay, we had a 1, 2, 3, 4 bar up move, impulse wave, 2 bars to catch up to EMA. And this is the line, and I cloned it here. And it's got the potential of, and if you can kind of get this on here right about the right time, I realize it's going to be, kind of not, it's a moving target to know where to place this line. But this is a 15-minute bar. So, I mean, a minute before, maybe 2 minutes before, you can start to get the feeling of where it's going to go and where it's going to finish at 15 minutes. And you can put that on and say, okay, it's a 1.75. Well, it did go more than that, but you can say it's at least probably going to be a 1.75. So is that worth my time? If it is, great, take it. If not, if you want 2 or more, then do that. But the point is that you can do these on every single one. Here's one that's a 4 bar down and a 1, 2, 3, 4, 5, 6 bars to catch up to put in a red bar against the 8 EMA. And so you can clone this line, which I did here. And is that right? It looks like it might be the same size, but let me clone it again. Okay, and it goes at the top, right? You're not going to get in at the top because it just doesn't work that way. You have to see it finish, but the measurement is from the top. But anyway, the stop can be up here, above that area. That's a half hour level there, even more. Like it's been at that level for probably hour and a quarter, so it's a pretty solid level. I feel comfortable putting a stop up there, and then you can say, okay, I'll take it to the bottom of this line. That's a 2.64. At 2.64, that's pretty good. If you're risking 1,500, what's that? That's 1,500 times 2.64. Okay, that could be $3,960 trade right there very easily. And the thing is that, like I said, I've been looking at my stats, and even though I have a good win rate, this is turned around. My average profit is only $800 and my average loss is $1,400. Wouldn't it be great? Wouldn't it be great for my profitability if I could flip these around and make the average, or keep the average loss at $1,400, but make the average win say $4,000? That's like 5 times the profit, and my average risk to return, instead of being 0.58, could be 2 or 2.5 or something like that. Now that would be massive for my trading. That would be absolutely massive for my trading, right? So that is kind of what I'm thinking about right now with looking at these. Do these come around, every day? They don't even come. No, they don't. They don't come around every day, but they come around, fairly frequently. And this is just one. This is just one instrument. I can look at multiple instruments to find these setups. Here's another one. Here's 3 bars down. Okay, that's pretty good. It's breaking out of a consolidation range under VWAP. 3 bars. Take the line, clone it, put it here. Find the bar that is reacting to the reacting to the 8 EMA. Put a risk return on it. Put a short expectancy on it. It's actually, that's locked on. That's why I can't move it. That one should go to right about there. And you don't see the wick. You don't see the wick on this because I took it off, but it does wick down to that area. So as you can see right there. So that made it down, and that one, 3.39, right? So again, 3.39. If you could get it, let's call it 3 times 1,500, $4,500. Okay, so as you can see, what kind of an implication would that have on my trading if I were to just let it ride down to the target? This average profit would be a lot bigger, a lot bigger. And, overall, the risk would be, it would just make a lot more sense, right, to do that. So, anyway, that's what I want to show you. Using 15-minute candles right here. Let's do one more. This one, we had only 2 candles, but they're big. Actually, this is a trade I tried to take today. I couldn't get a fill because my server was disconnected and I didn't know. But here we go. These are pretty big candles, so even though there's only 2, it's a pretty good distance. I took this line, cloned it. Here was the red candle that was reacting to the 8 right here, and I tried to get a fill right at 9:30 sharp, but it just I was disconnected, but I didn't know I was disconnected, and I just couldn't get in. But let's say we were to go ahead and say that I was able to get in, and I did target the distance from the top of this candle to the bottom of this body here. That's this distance, and trade did go that far, and that one was a 2.06. So, okay, great, 2.06, I'll take it. Okay, so anyway, that's what I want to share. That's what I wanted to show you. This one here is a 1.4, maybe not worth going for. That's what I want to share with you. How to set targets with an ABCD pattern and decide which ones are worth your time in terms of their risk to reward, and then thereby try to increase your overall return when it comes to risk to reward. So that's basically it. Again, today no trades, but we're gonna try to use this system going forward and see if we can't get some better trades using the 15-minute. Okay, that's it.